Good day, everyone. Welcome back again to the second episode of Catch the Wave Strategy Advanced. I'm so sorry we've been away for a while. For some reasons, we couldn't overlook. So, please bear with us. And today, we're going to be dishing out value. I promise all the videos I promised to make, we're going to do them this week. So, stay tuned. Remember, it is time to scale up your trading business. It is time to scale up your trading business, like we've always said. So it's not based on luck. We actually do these things to tweak our strategy to increase the win rate and give ourselves better odds of winning. So what are we going to talk about today? We are talking about confluence factors. So today we're talking about confluence factors. Remember, we've done top-down analysis already. If you've not watched the video, please do well to watch it. Check our channel. You're going to see the video. And the first video on Catch the Wave, the starting video, also try your best to watch it. And then today we're going to be doing confluence factors. What are confluence? Everything you need to know about confluence, how we use this confluence to tweak we incorporate it into our trading to give ourselves better chances of success. So without further ado, let's go in deep. So confluence in trading is when you combine more than one trading technique or analysis to increase your odds of a winning trade. So you can simply put that when you see multiple trade signals lining up on your chart, let's say you want to go long, and okay, you check based on this, you see it is telling you buy. You check based on another analysis, a different analysis, uncorrelated. It must be uncorrelated. So you check through another strategy, you see it is also saying buy. You check through another strategy, you see it's also saying buy. So there are more chances of that trade playing out in your favor. First reason, because a lot of people are seeing that same signal and are looking to buy at the moment. Second reason is that when a technical analysis or fundamental analysis, whatever, that has an edge, when it plays out, it has its own edge and other strategies have their own edge. So when they all come together, even if one strategy fails, not all will fail at the same time. Of course, it doesn't mean that you will book 100% win rates, but your win rate will be higher than someone who just trades based on one reason he sees on his charts. So the first thing you should know about confluence factors is this. First of all, the confluence factors you're looking for must be uncorrelated. For instance, let's say you're looking to trade a key level, and you say, okay, I see this key level and it is also a support level. That actually is sounding weird, because a key level is most of the time it's either a support level or a resistance level, or even another block, a supply or demand level. So you can't say, okay, this is a key level and it is also a support level. No, that is uncorrelated. It is so correlated. We need something that is uncorrelated. For example, a dynamic support level. Dynamic support level are support levels like trend lines, trend channels. If you don't know what support and resistance are, it's nothing difficult. Support is just a level where buyers come to push price up. You can also call it a key level. A resistance is just the vice versa, which is a level where sellers come to push the price down. You can also call it a key level. So the confluence factors I have on my screen are MKC. You might see this formula and you might begin to say, oh my god, they're here again. No, it's nothing difficult. I just used it I don't want much writing, so I just wrote it like that. It's very simple. It's what we've covered in our first video on Catch the Wave. So it is M for market structure, K for key level, and C for confirmation. That is a good confluence. First of all, you see the market structure. Let's say, what is the market structure? Uptrend, for instance. You see the market structure as uptrend. Now, this when you see the market in an uptrend, what is the one thing that you shouldn't be doing? Let me give you 3 seconds to think of that. 1, 2, 3. Okay. If you got it right, you would be saying the one thing I shouldn't be doing is shorting. You shouldn't be selling when you see the market in an uptrend. Reason is because there's more volume of people buying. So if you're trying to do against the herd, you're trying to trade against the multitude, you stand a chance of losing your money because they will win you. You don't have enough capital as a retail trader to push this price down. So the thing is just to follow what the people are doing. So once you see it in an uptrend, you begin to look for buy opportunities, and then now not you don't just buy anywhere. For example, if you buy at this spot now, the price moves small in your favor and now it's retracing against you, you would suffer a big loss. Even if this price was meant to move up in your favor, you suffer a big loss before it begins to move in your favor. But if one waits for the price to come to a key level, this is the second confluence. You're not just buying at any random level, but you're buying at a key level. Why is it a key level? Because price has retested it here as resistance. I remember I told you resistance is a place where sellers come to push the price down. You see, as it came here, they pushed it down, and then they eventually couldn't push it down here. It broke out, and now it is coming back to that level. Now remember that resistance, when broken, can turn support. So we'll call this now resistance turned support, or simply just call it a key level like I do. I call mine key level. So now when price is back to it as support, we don't just enter, we now wait for the third confluence. You see, we already have 3 confluence playing out here. The third confluence, which is confirmation, a candlestick confirmation, rejection of that level, showing us that yes, a lot of people are aware here. The big players are coming in. The big players are coming in. So when they come in, then we follow. We get in. We get in the trade and look to ride the bulk of the move. That is the first confluence I have here. So moving further, second confluence is moving average. Now, a moving average is just an indicator, a simple indicator that helps us that acts as a dynamic support level in an uptrend and a dynamic resistance level in a downtrend. One thing that is worthy of note about moving average is that moving average should not be used in any other market condition apart from uptrend and downtrend. Very soon after we conclude this session of Catch the Wave, I'm going to do a video on the 4 stages of the market so that you will know when to apply this strategy and when not to. And I'll give other strategies that will be used to tackle other market conditions, so that not when the market is doing something else, you begin to stay out of the market and you're not having trades for, let's say, some days. If you're a swing trader, you have a longer span of period where you won't have trade. So there are actually 4 basic stages of the market, but that's not part of this video. So let's move into what we're doing: moving average and key level. Now, the moving average is an indicator. It's very simple, and the setting I love to use very well is the exponential moving average. I thought it on how to use MT4 so you can know how I put moving average. I love the 50 period moving average, basically 50 period moving average. So now when you see the moving average indicator on your chart, that's the first thing. You plot it on your chart, and then you see price respecting it. If price is not respecting it, there is no point using the moving average. I see people just see, okay, price comes close to the moving average and they begin to buy. Well, everybody has his own point of view, but mine is I want to see price jump away from the moving average once and twice before I begin to look at the third time. So when this happens, I plot out my key level. This is resistance now turning as support here. So as I plot in my key level, and then I'm seeing price falling back into it. Now I see a confluence here. I see that the moving average is being respected plus the key level. So this now is an A plus trade, because you see that people that make their trades based on moving average alone will be going long here, and people that make their trade based on key level, the support and resistance level, they are also looking to buy here. So I have a lot of reasons here. First of all, the market is in uptrend. Secondly, it's in a key level. Thirdly, it's in a moving average spot. You can call this a stacked area, because there are a lot of stacked buyers will stack in positions here. And then thirdly, I would wait for a confirmation. Some people don't wait for confirmation when they see all this confluence, but for me, I would still wait for confirmation. It's up to you, depending on the kind of trader you are. They have different kind of trader depending on your personality. So when I see this, I will now look to enter after the confirmation and ride the move. So there are other uses of moving average, but we are just so focused on entries for today. Confluence. So let me take you through the chart to see how it looks like on real life. So this is the chart of United States dollar against the Japanese yen. So what did I see on this chart? So you can see now that on my chart is plotted the 50 period moving average, and checking here, the market has tested it here, although not a touch, but you can call this a test, because it's you don't just take it as it mustn't price mustn't just touch it perfectly. This also you can call it a test, because like I said, price mustn't touch it perfectly before you can say, okay, the market is respecting it. Now I come here and I see that this market has formed a key level here. This is resistance price. Sellers push it down and then it broke through, and then price is coming back to it. When price came back to it, we now see a rejection. This rejection candle here. Price went into it and then pulled out immediately, forming a pin bar. That is our entry trigger. So we enter after that pin bar closure, and you can see how it played out. Neatly with nice profits. So this is just the confluence factor we looked at here when trying to place this trade. So moving further, we have the Fibonacci retracement tool, the Fibonacci retracement and key level. Now this Fibonacci is not an indicator, it's a tool that most price action traders, most technical analysts use. So the Fibonacci retracement tool, we're not going much into it. How do you use it? Once you see the market in an uptrend, for instance, what I have to do, okay, let me erase this, erase it. So I see the market in an uptrend, for instance, like this. How do I do it? I drag my Fibonacci tool. Also in the MT4 video, the tutorial on how to use MT4, I shared how to draw the Fibo. So we just drag it from these lows all through to these highs here. When we drag it from the lowest, most recent low to the most recent high is where we drag it to. So after dragging that, what the most important levels I look out for is the 61.8% Fibonacci level. That's the most. This is a killer secret most people don't know. It cost me to actually figure this out. the most important levels, the strong level, you can call it a golden level, is that 61.8 level. Now, when the 61.8 level comes in confluence with a key level, when the 61.8 level comes in confluence with a key level, that is when I'll begin to look for buying here. Can you see that? So I have a lot of reasons to go into that trade: a key level and a Fibo retracement level plus confirmation, and then the trend. Because me, I don't trade against the trend. So these are the things I begin to look out for when I'm placing my trade. You can see when you have all these things in place, your win rate steps up higher than other other traders that are just trading based on one reason for entry. So this so coming to the chart again, you can see this in action here. The market is in a downtrend. It's in a downtrend, making out its lower lows and lower highs, lower high. And when it comes to this key level, you can see that the market respected it here, broke down and came all the way back to respect it. Once we see this, what then are we looking for? I plot my Fibo from the highest high to the lowest low, and you can see that on my chart I removed all other Fibonacci levels because I don't think I need them. I just need the 61.8 level, and I also left the 50% level. So now the we have a confluence. You can see this 61.8 here. We have a confluence of this 61.8 level and the key level, the level of resistance, now support turned resistance here. So I place my cells after confirmation, and you can see the move down. It actually played out. So these these tricks and hacks work. They actually work. We are not just giving you a cock and bull story here. We're giving you things that actually work. So this is another. So coming to the chart again. This is the Fibo level drawn on my chart from the most recent low to the most recent high. Looking at the market was previously in a downtrend, but now it's now in an uptrend. It was previously in a downtrend, but now it's now making a series of high highs and higher lows, making me to call this an uptrend. So how do I pick my entries? I first identify the key level of resistance, now turned support. So when the market broke out of it and is now coming to test it as support, that was when I plotted this Fibo from the most recent lows to the most recent highs. After plotting that, I see that it has a confluence of the 61.8 level. Then I fired the buy. You can see that's how we look for A plus trades. We filter out bad trades, but you actually miss some trades. Because there are some trades that will work out only based on one reason, and you miss them. But that does not mean that because you miss some few trades you begin to take trades randomly. You won't get trades often as much as, okay, someone that just looks for key level. Yeah, you won't get trades much as that, but you have a higher win rate. That's the good thing about it. So moving further, we now have trend line and key level. When the trend line is respecting the market is respecting the trend line, and we also see that it has a confluence of the key level. That is a good reason to punch the buy button, or a good reason to punch the sell button if it's in a downtrend. So, and the last one here is supply and demand plus Fibo, but this is purely based on, we are not going to go deep into that. A supply level is a level where sellers come to push the price down also, and the demand level is where buyers come to push the price up. So when we see a when we see strong move from a level, let's say for example the market was coming down, and then we see a consolidation followed by a strong move, we're going to call this a base and mark it out as our level of demand. So we can call that demand level. So that is how to identify your demand level, and then you wait for price to come back in. You wait for price to come back into that level, show you a rejection, and if peradventure it has confluence of Fibo, that is how to look for a buy. And at times you might also see that the supply level has confluence of trend line. Yes, at times it can have a confluence of trend line or the demand level. But I don't want this video to go more complicated. In another video, we're going to go into supply and demand and smart money concepts. But for this, we're into just retail trading. We're not going into smart money concepts for now. So back to our trend line and key level. Trend line and key level, I've explained it. So let us go to the chart. Let me give you a walkthrough on how it works in real life. So here is it on my chart. Coming here, you see that the market respects this trend line once. I know you might not call this a touch. Remember, a trend line is not just a line, it's an area. It's an area. So this is also a touch. This is also a touch. Although this trend line was drawn hastily last week, we weren't trading because it was actually because of health issues. So we don't want it to be exposed, but I'm somehow saying it. So it's when price tested this level once here, twice here, we now know that yes, this is an important level, and if price comes here the third time, we should look for buyer. So when we see price make a retrace back to that level and it's having a confluence of the trend line, we now wait to see the confirmation. We see the confirmation, we place the buy, and then the market moved up. Sorry, we didn't place the buy. We didn't buy this. We only looked at it. We just looked at it. We didn't want to go into the market. So the market actually closed. So the market closed here, and but it's open now already. So you can see how this plays out. This plays out well. It plays out well. We use this consistently every day to make our trades. So we've actually come to the end of this video. Thank you for coming by to say hello. We're actually indebted to you. We're so happy. Thank you very much. And then there's something next. I want you to like this video if you find it useful. Subscribe to this YouTube channel if you haven't. If you're here for the first time, you're highly welcome. We appreciate your presence. Please subscribe to this YouTube channel and turn on the notification bell so that you'll never miss a video from us, because we give content filled stuff here. So success is great with us. We give you things that could help you stay consistently profitable all the time. So, and then share this video to your friends and fellow traders who you want to scale up their trading business to. And cheers to your continued success. See you in the next video. Goodbye.